Welcome to the Weekly Crypto Check-In, your go-to podcast for navigating the wild world of cryptocurrencies, hosted by Robert Swarthout and Andres Sandate. Today, recorded on January the 28th, we're diving into the latest market shifts, blockchain breakthroughs, and expert insights to keep you ahead of the curve. How's it going, Andres?
Good, Robert. Happy Wednesday. I know there's certain parts of the country that are recovering from a winter storm over the weekend, but yeah, it's chilly in Atlanta where we're at, but at least the sun's out, so we're good. How about you?
I'm good. It's to your point, it is chilly. It's amazing how warm 40 degrees can feel when after you've been really cold. And I imagine come next Monday, we're going to be wishing it was 40 degrees because it's going to be cold this weekend. I've seen like some wind chill predictions in the negatives for us, which is unheard of in Atlanta. So we'll see.
Well, we should we should segue. I always try to think, what's the best way to segue from talking shop to getting into crypto market structure and crypto market structure bills. Hopefully this bill is not on ice. Let's go with that one.
Well, and admittedly, the weather did impact them as well, right?
It did,
so the huge snow that was dumped on DC, I guess, put a couple-day delay in some work that was being done. But there has been progress, and progress is probably loosely defined here. But as a quick refresher, this market structure bill that everyone in the crypto world is hopefully looking forward to, I would say there's kind of two bills that are being worked on in the Senate, one in the Ag Committee and one in the Banking Committee. The Ag Committee one is for the commodity side of it. The banking side is working on the security portion. So there was a kerfuffle, I don't know, a week or so ago where we were talking about stablecoin yield, and that kind of put a kink in it. And that vote for the Banking Committee got pulled. They did not have that. There's still negotiations going on as far as I'm aware. And then the flip side on the Ag Committee, they are working towards what looks like to be a vote tomorrow, so January the 29th at 10:30, around their market structure version of the bill, again, for the commodity side. And, I don't know if it's going to be a partisan vote. It doesn't seem terribly bipartisan, but it is making progress nonetheless. I think it's the important part there.
Yeah, it's an attempt, it seems like, at this point to try to, like you mentioned before we jumped on, to have less pork. I feel like some of these bills, there always is last minute horse trading and things that senators and their constituents think are important. Typically it's in their in their backyard, but I think it's like trying to keep this as clean as possible. You made that point, which I think is a good one. I think the stablecoin yield is a real one. I think that I think we'll get into that in our second headline today, talking about the B of A CEO. So we'll leave that one for a moment, but it's going to be interesting over the next few days and I guess week, assuming there aren't unforeseen delays, to see, does this bill continue to march along around some of the big core issues as to the framework of regulating the space, or does it end up getting bogged down because of stuff that really is irrelevant and is just political? And hopefully it's the former for the industry's sake, because I think the two big themes that we had talked about kind of coming into this year are still very much alive and well. And we've seen a lot of activity around tokenization, but there does need to be clarity from a regulatory standpoint, I think, for the industry to really, as we've said for months, maybe years now, that we've been working on the space. There needs to be more clarity so that there is more institutional enterprise and even just everyday consumer adoption.
Right. And we'll get into institutions because they are continuing to creep towards the space, announce different things, but to be full on green light, press the gas pedal, we do need this. We need this partially because if we end up with a different administration in, I guess, 2.5 years, they could decide they hate crypto, right? And we'll be back where we were a year and a half ago. So I think that I think this gets done. I think this is largely the theater of politics happening here, but it is not a clean process. At best, it's sausage making. So,
well, I think one of the ideas from a just from the standpoint of stable coins again is, this conversation about deposit flight, but
Mhm.
it could be, and I saw one report that stablecoin yields end up sort of becoming much like money market funds, right? So you can put your money in like an interest-bearing account in cash, or you can invest effectively cash in money market like or cash like investments. And so maybe that's a compromise, right? I think
Mhm.
it's going to come down to the parties on both sides, like that don't want this heavy-handed regulation and regulatory framework for crypto, and then those within crypto that say, "Hey, give us
Mhm.
freedom to go and build businesses and compete, and don't tie a hand behind our back with the traditional centralized banks and the centralized,
Right.
large institutions that generally crypto was disrupting early on in its,
Mhm.
in its more formative years." So it's going to come down to, again, at all times, it's a compromise, and hopefully it's not, pork laden bill that has to get negotiated. And then there's obviously just the political theater in DC at all times, right? Like, will there be enough, votes to keep the government funded for, the
Right.
next week, all this stuff. So it's going to be some theatrics for sure in the week ahead.
Yep, and it's to your point, it's the theme, albeit I don't think it's a theme that anybody wants. Like, so anyways, I think we can move on here. So we kind of alluded to it, or you alluded to it. So Bank of America CEO Brian Moynihan was quoted as saying, and to me it makes sense, but the quote is saying that he thought $6 trillion in deposits would shift to stable coins if stablecoin issuers were allowed to pay interest for holding the stablecoin. I think one small thing that we should clear up here is if you hold stablecoin and you hold it within, say, a Coinbase wallet on their exchange, they do provide the ability to earn interest. They call it yield, and it's because they're likely lending out to the other side, right? So it is not a pure bank account like a checking account would be or savings account, but this would be a little, it would be a true checking or savings account type interest bearing thing. So I hope that we get through this market structure bill and don't have to complicate it by adding this to it. We'll find out whether the banking committee wants to have this in their version. I would imagine here in the next couple of weeks, um, and go from there. It feels like something that we could clean up later, and we don't have to again complicate what is already a complicated bill.
Yeah, I mean, look, there's some heavy-handed, lobbying going on in DC as we speak, right? So the
Mhm.
banks, this one is it's hard. It's just hard not to have a strong opinion here. I
Mhm.
started my career as a banker, right? I worked for 2 big super regional banks. Now, one of them is part of one of these SIFI banks, and I think the other
Mhm.
one would be considered like a too big to fail bank largely
Okay.
too. The when I worked inside the banks, like, things were great. Like, this was pre-'08, and
Mhm.
then '08 happens, okay? And you saw banks really needing, the government to step in and save some of them, right? And then we had these systematically important banks, or institutions designated SIFI banks, right? So you
Right.
literally can't fail now. And the giant banks have gotten bigger, right? And
Mhm.
so we've seen much more centralization of deposits, centralization of markets, centralization of all things touch money. And then
Mhm.
along comes crypto.
Right.
And for a long time, the banks said it's all about illicit criminal, activity, and there's no good use for it. And then all of a sudden the technology becomes relevant. And
Mhm.
now you see these bank CEOs coming on and talking about deposit flight. Well, what do we think the banks are doing with the deposits that you and I put in the
Right.
checking and savings account overnight, right?
Yeah.
They're levered, right?
Mhm.
So they're lending out that cash. So there's a big part of me, I don't know if it's all of me, there's a big part of me
Mhm.
that wants to put the middle finger up at the banks
Sure.
here.
Yeah.
And then there's another part of me that's like, for the sake of crypto and moving forward, and to your point, Robert, not getting this thing bogged down, because the banks probably have a lot more spending power right now
Mhm.
in Congress. They have a lot more influence, and collectively they have a lot of influence over, politicians. Let's just
Mhm.
call it what it is.
Right.
That I'd have a hard time, you know, keeping my middle finger up because I do think that crypto and the banks do need to find a way to coexist, right? I do think that we do need a financial system where crypto can be like it can exist and it's not the enemy, the mortal enemy that it was made out to be under the
Right.
last administration. So that's kind of my analysis. I don't know where this 6 trillion figure comes out. It was probably a propeller head somewhere in his team or her team that like came up with this and put it
Right.
on their desk. And then he is the vocal, person with the megaphone. So he goes and says this, and he's not the only bank CEO that's saying this.
Sure.
But I don't know. It's one of those things where you look at it and you say, are the banks going to win? Are they going to have Congress in their back pocket, or are we going to come up with something that seems reasonable? I don't know if the word fair ever enters, when it comes into politics to play. But what's your take? I mean, I don't know. That's just me from personal experience, professional experience.
Yeah, I've sometimes I try to figure out like how I stand on things when I think about like what's an analogy to explain this to somebody else when it comes to crypto.
Yeah,
And I think that part of it for me comes down to what is the most likely path, because what is the easiest to happen? Is it easier for it to get slipped into the bill and interest happen? Or is it easier for it to not get slipped into the bill? I don't know which side is stronger. I tend to think that it won't get slipped into the bill. That will be the breaking point if I had to, I guess, place a bet on something.
yeah,
But at the end of the day, I think that we eventually get stable coins that you can bear interest on. Like I think that happens. I don't know if that happens as part of this process, and I just hate to see it again get dragged down in it because of it.
yeah,
So,
yeah. Well, yeah, I guess there's two sides of it, right? There's the passive interests, and then there's the activity around staking and yield, liquidity, I guess, sort of solutions. They can, they both solve different things. So yeah, something to, something to pay attention to. Again, these banks and their CEOs and the lobby is quite powerful. So for the sake of the bill, it'd probably be a lot easier if, the loophole, didn't exist, but we'll see.
yeah, and I guess the last thing I'll say on this is like, is it banks don't want to pay interest because they think that is their competitive advantage right now? And if that's the case, why don't they just like issue B of A USD, have their own stablecoin, and then like their customers, if they want it, they can sell it to them. Like they don't have to leave. I don't quite understand the motivation, and maybe I'll never understand it in this case, but that is I guess the sticking point for me. So.
Yeah.
Anyways, our third topic, so MicroStrategy, they always like to announce, or Michael Saylor more specifically likes to announce when strategy buys more Bitcoin. That seems like 100% of the marketing this company does. And, for a while it was like every time they were buying their next purchase, it was more Bitcoin than they had ever purchased before, blah, 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 that snowball. They now hold, as of, I guess, when was this? This was 2 days ago. They now hold 712,000 and change Bitcoin. So for a collective value of, excuse me, let me back up. Not for collective value. They have spent a total of $54 billion doing this. Their average price now at this point, blended, is $76,000 and change. That is getting awfully close to our current price, Andres. Like it is slowly creeping up. And what's interesting to me about all this is if you kind of overlay when they announce these purchases with how the price, the Bitcoin price acts, it doesn't act positively. And you would think that these are all off-market trades through OTC desk or dark pools or something like that. And I don't know. At some point, you think that this narrative is going to wear thin. I'm not quite sure what the outcome is, but I'm a suspect nonetheless.
Well, he being Saylor frames it as market maturity, right? And this is the fact that the price goes down after they buy is a sign that the market's maturing and not owned or dominated by one, central player, et cetera. I mean, at least that's the narrative.
Mhm.
I don't know. I still think this whole thing has become the long-term capital management of
Yeah.
crypto. Like
Right.
they can't fail.
Yeah.
They just can't. I just think that that's not a likelihood from the standpoint of like all their Bitcoin,
Right.
has to be sold per se, and that doesn't mean I'm calling Bitcoin to go to zero or anything, but they own so much now, and there's so many implications and so many folks impacted
Yeah.
that I don't see I don't see how this MicroStrategy or strategy doesn't play out. Now, I don't know if investors are made whole. I don't know if he makes money.
Right.
On paper, he's worth a ton of money.
Right.
Investors maybe have done okay depending on when they were invested.
Mhm.
Take all that and leave it aside. I just think at this point, where Bitcoin is, the horse is out of the barn a little bit.
Yeah, I'll probably agree with you. I would love to know another example, if it even happens, and without Bitcoin being part of it, where a CEO talks about whenever they purchase something. Like this is 100% of what they talk about, and it's just
Yeah.
like, if they think this is going to move the needle, or what's the point? Like, I don't know. I don't spend tons of time thinking about this. I used to spend more time thinking about it because I was just intrigued, trying to figure out what the end result was. And again, we haven't seen what that may be at this point, but we'll just have to, I guess, put a pin in this one and kind of watch it from afar.
Yeah. Yeah. So Bitcoin is trading around 89, 90,000. Is that about where
Right.
it's at?
Yeah, you need to change.
And it's off of what was high. I mean, if you look back in 25, I mean, the first 3 quarters of 25 for Bitcoin were pretty good, right?
Yeah, I
And
mean,
then in the fourth quarter, just the bottom fell out, and
yeah, it was high 120s,
yeah,
120,000.
124,
Yeah,
yeah,
something
120
like that.
something.
So,
And
it's definitely pulled back from that, and it's been a challenge to kind of see, when the market's going to move again. We said this last episode. I still believe the market structure bill is the catalyst for crypto. We'll see, but again, there's all this other crap happening in the world right now that isn't helpful, or even in the U.S. So,
yeah,
it may not matter if the bill is passed tomorrow. So,
well, it wouldn't be a proper show without a Kansas native having a Kansas headline. So,
yes,
I mean,
yeah, here we go.
we gotta move on from Sailor
Yeah.
at some point. Talk about the crypto reserve in the great state of Kansas. Ad astra per aspera.
Yep. Yeah. So we talked frequently last summer, about different states and
Yeah.
there was this Bitcoin state reserve tracker thing that we were following, and it kind of got quiet on that front. And then this kind of popped up, kind of surprised me. I guess maybe they had been working on it the whole time, but yeah, they Kansas is setting it up, and the bill has been introduced, to be clear.
Right.
It has not been fully voted on, but they're trying, at least, I guess. So,
Yeah, and it's unclaimed property, right? So
Mhm.
all over the US, there's unclaimed property, unclaimed assets. You sometimes get these letters in the mail, or there's websites where you go type in your name, and you're entitled to some small amount of money from a settlement, tobacco, or some big case, etc. But so it's unclaimed property. It's not new purchases per se. What well, what I would say is it mirrors like the U.S. Strategic Bitcoin Reserve. Probably, I'm thinking that's a page that they're taking and playing. And if I was a betting person, I'd say it gets done because Kansas is trying to be more known as a job creator. It's in the heartland of America. It doesn't have access to the populations and doesn't have access to some of the things that you see on the coast in terms of density. So
Yeah.
trying to create, not that this will create jobs, but just create more awareness and sort of thinking about the state as a more progressive, more oriented towards maybe the future economy. And they did land the Chiefs, Robert.
Yeah, yes, correct.
So
A bit of a coup there.
Chiefs, if they got the Chiefs, there's no reason they can't get Bitcoin
Yeah.
reserve set up.
That's funny. Yeah, and that's a good point. I think that especially these states that are trying to figure out how to be, I guess, forward thinking, be part of the 21st century. This is a creative way to go about it. I like this model much more than I liked seeing states saying, "Oh, we're going to take tax dollars and go buy Bitcoin or whatever." I
Right.
don't think most states are in a position to even think about that, and to kind of see them be creative is cool. So,
Yeah.
moving on here, our next topic is about institutions continuing to move towards crypto usage. This is so we haven't recorded for this is this end of the second week, and it's crazy how there'll be no news one week, and then the next week it's like a month's worth of news happens in 2 days. This is an example of it. So Citigroup is working to move 45 trillion in EU securities on chain. Chainlink is working to help move some US equities, 80 trillion of those on. There's so much happening. BNY Mellon was talking about tokenization is going mainstream in 2026. Again, this is furthering the narrative that we've talked about many times, but like Paul Atkins saying all US markets will be on chain in the next 2 years. This continues to be proof that it's happening. It doesn't feel like it from I guess a layman's perspective, because it's just the system continues to work, but things are moving behind the scenes and seemingly picking up pace, which is really awesome to see.
Yeah, no doubt about it. I mean, I think this and the next headline around institutions and traditional market participants at size, right? With the scale that these institutions have in terms of managing pensions and managing the livelihoods, right, of retirees and teachers and firefighters. Just really amazing to think that these institutions, because they have belt and suspenders around all the things that they're doing, that doesn't mean they get all of this right. Like when they do an asset allocation, when they decide, hey, we're going to go increase exposure to a particular asset class, whether it's equities or fixed income, there's a lot of different partners and firms and participants involved in that. Not to mention, government, right? The board, the investment board, et cetera. So the fact that probably in the survey, this number, 80+% said they plan to increase exposure, just goes to show you how much there's narrative has shifted and the thinking has shifted, because these institutions don't move quickly, but when they move, meaning they change their allocation, when they adopt a new asset class, even a 1% allocation at a $100 billion pension fund is a meaningful amount of money. Right. And so, yeah, it's always like back to what you said, not what they say, what they do, right? So we'll see how this manifests itself over the next year or two. But I think that going all the way back to the first headline, that market structure bill, it's looming, it's pending out there, and that could potentially really unlock more of these institutions to move in as they feel like, okay, there's law, there's structure, and there's a framework around, getting more active, more engaged.
Yeah. And, we often talk about like crypto is 24/7, 365. Finance largely has hours. It's largely a, maybe a 9 to 5 or 9 to 7, Monday through Friday type situation. I think this is where people will notice when not crypto, but just all digital assets and all that takes hold in the system. We're probably a couple of years away from it, but when you'll be able to go talk to your buddies at a football game on Friday or Saturday or Sunday, and somehow you start talking about stocks and you decide you're going to buy one, you'll be able to literally flip open your phone and do it at 10 o'clock at night on a Sunday. That world is not too far off. It's less than 2 years away, is my guess.
And if you go back to what you said earlier, Robert, around trying to create an analogy that everyday people could maybe identify with and relate to. So let's just take Amazon. I think everybody could see in their lifetime in the last 10 to 20 years, like Amazon benefits from the internet boom. It starts off selling books. Right. And now, if you can't get it within hours or certainly by the next day or two, you're probably going somewhere else to look for that product. And don't even get me started on content and services, right? So we live in this economy now that has become instant and on demand, and financial assets have largely been, like you said, you can trade from 9:30 to 3:30, like Monday through Friday, and then like you're closed for like 19 holidays. Right. What? So, I agree with you. I think we're going to see a remarkable acceleration in this over the next 2 or 3 years, and people will look back and say, it's like, go back to Amazon. I went from not being able to buy it to now I can get it in an hour, 2 hours.
Yeah.
And that happened. And now we could never go back.
Yeah. It's you almost like, some people are young enough where they don't even understand that world used to be that way, and they're going to grow up in this. This is going to seem natural, but I guess to people that predate it, that the change is will be the ones that notice it the most. And kind of what we've been alluding to a little bit here which is our next topic, is so the NYSE has kind of really come up with this full set of plans that they announced around basically going on chain. It includes trading, clearing, settlement, custody, and tokenized cash funding. And the numbers are massive. If you look at like the annual U.S. equity trading volume is $100 to $120 trillion. At some point, that's going to be a 24/7, 365. And that number, I would imagine, only goes up when you have more hours in the day that you can do this stuff. So,
yeah,
pretty awesome.
What's really cool. Oh, go ahead. Go ahead.
And I guess the last thing I was going to say is, like, I spent years thinking about what seemed to be a fantasy land of stocks someday would be trading on a blockchain. And it's a little bit surreal to see them announce a plan. It'd be so detailed. And they're basically like, this is what we're doing. It was very little fanfare. And it was just kind of like, we're moving forward, and you better get on the wagon. So,
yeah, for those of us that live in Atlanta, and for those of us that are in the markets and financial services, this to me is one of those headlines that if you read it on the surface, you'd be thinking still the NYSE is that like old 80-year-old dude with like white hair that's always in the pictures when they show the trading floor. And, I don't even know who the guy is, but he's just become like the meme of, the stock market, because he's always who they show when they show an image of, the New York Stock Exchange and the Golden Bell. And that's not how this happens anymore.
No,
this happens actually down the road from you and I off of 285 and 400 at Intercontinental Exchange, also known as ICE, and ICE, not the ICE that's in the news every day, all over the country, but Intercontinental Exchange, which owns the 50-year-old New York Stock Exchange,
yes,
and other exchanges, like they have dropped, obviously, like, I wouldn't say it's a bombshell, because I think people in crypto expected this, but I think it's a massive headline. And for us down here in the South, I think it's cool, because I have always wanted Georgia to be one of those 10 states in the US that's like the place where people want to come and work when they think about technology and think about innovation. They think about financial markets. And we're not New York, we're not Boston. Like, we have our strengths, right? We have great universities, we have great weather, we have a reasonably good cost of living, a fantastic airport, all these things that if you think about what would be another really amazing thing, it would be to be like the world's leader around some of the tokenization, some of the market transforming, let's call it, moves that happen in digital assets and crypto. And to me, ICE stands to be, people will still know, the markets, the public stock markets, as the NYSEs, like, but to know that company is here and doing that, I think is really, really freaking awesome.
Yeah. And it's, this is the plumbing that I often talk about.
Yeah.
That is getting reworked here. And it's, we're not too far away from a very different future, which is pretty awesome to see. So,
yeah,
I'm sure this will get rolled out in phases, and we can follow along. But that was some really awesome news about a week ago.
Yeah.
So we'll move on to our last topic. We often talk about Brad Garlinghouse, the CEO of Ripple. He's certainly the face of the company when it comes to being out and about. So Monica Long is the president of the company. She makes appearances out, but not as often as Brad does. But what I found interesting is she was recently interviewed, and she basically made some predictions. And it was cool to kind of see, I wouldn't say taking a gamble here necessarily, but like, putting her word out and kind of getting her perspective. So she said, in the next 5 years, stablecoins will become fully integrated in the global payment system, not as an alternative rail, but as the foundational one. That's pretty cool. I mean, that would be a major shift, because it is definitely a secondary rail, if not a tertiary or even fourth level rail at this point. By 2027, she fully expects financial institutions to tap into the power of regulated stablecoins, 24/7 collateral mobility. So I guess that first half is into the second half, for sure.
Yeah.
And I guess I won't read all of the things here, but the one thing I'll call out is by the end of 2026, so this year, she expects balance sheets will hold over 1 trillion in digital assets. Roughly half of Fortune 500 companies will have formalized a digital asset strategy. When these kind of comments are made, I don't think that she's just like guessing. I would imagine there's a little bit of information there from other conversations that Ripple's having as a company, because they have a collateral products, not collateral. They have custody products, excuse me, and other things that help inform this. And I would imagine that she's probably going to be right, which is pretty cool to see. So
Yeah. I see a couple of things happening here. One, I'm so excited to see another executive. Not that my Rock Chalk Jayhawk fellow alum, Brad Garlinghouse,
Yep.
isn't somebody that can't explain the story and isn't the right, and isn't a great spokesperson for the company and a leader and all that. There's nothing to do with that. It has a lot to do with they are in a pre-IPO state. They
Mhm.
are right. They're going to need to demonstrate to Wall Street and to their big customers and to governments the types of institutions they want to serve. This is not just the Brad Garlinghouse show. This is not just some startup founder,
Yep.
that's out there on a mission, right? And we've seen that time and time again in startups, right?
Mhm.
That their startup is sort of synonymous with the founder.
Right.
And so I think it's awesome from an executive standpoint to just start to see somebody else out there alongside Brad Garlinghouse talking about Ripple. Second, I
Mhm.
think you're absolutely right, Robert, that you wouldn't go out there in her position at this stage in their company and put these types of things out there if you didn't feel like there was credible, reasonable likelihood, all
Mhm.
those things. Because at the end of the day, like, they're a big enough company. I don't think they're taking these risks by making these proclamations unless they feel like they
Right.
want to lead customers to where the industry's going. And it's
Sure.
like, if you're not one of those 50% that has a digital strategy, you better get your shit together, right?
Good.
So it's kind of a little bit of also a third thing, which is a little bit of selling
Mhm.
around, you should probably start thinking about how are you going to manage your cash? How are you going to do settlement? How are you going to keep up with, the change that's inevitable? If you think about AI as a parallel, how
Mhm.
quickly that conversation shifted in the boardroom probably over the last 24 to 36 months
Mhm.
around, we were doing software and now we're doing AI, right? And then you read a headline, this morning that, SoftBank is looking at putting, you
More
know,
money.
$50 billion, I think, or
More.
thirty billion dollars in OpenAI. Like, it's just an astronomical number.
Right.
And so you put it all together, and I think that yeah, I mean, I think that this is a positive development for Ripple, but also, right, to hear that companies that probably are talking to Ripple are um, coalescing around this moment, like you said, in,
Mhm.
finishing the last headline, right? This is an exciting time for the industry. It's probably easy for us to get excited because there's been so many moments when it's been like, doom and gloom,
Right.
where the industry has naysayers and it feels written off. I don't think any of us ever believed that, but it's cool to finally see in these last two headlines, the institutional crowd, which we always knew
Mhm.
was going to be later. We always knew was not going to be that super early adopter, but it's kind of cool to now see people willing to kind of stick their neck out,
Yep.
and make these comments. So I think the next, yes, 9, 10 months, 11 months of this year is going to be pretty exciting.
Yeah, and I think that's a good segue to the end, but I'm going to use one of her last closing comments as my closing comment today. She said, ultimately, 2026 will be remembered as the year crypto became foundational to the world's financial infrastructure. I couldn't agree more. And to your point, we only have 11 more months in this year left. It's a lot, but we will see how it goes and kind of get to follow along here together. So that's a wrap for this episode of the Weekly Crypto Check-In. Keep updated on the latest crypto insights by searching Teton Crypto Capital or the Weekly Crypto Check-In in your favorite podcast platform. Leave us a review to share your thoughts, or like Teton Crypto Capital LinkedIn page for more updates. Until next time, take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.